Welcome to the deep dive. We take the source material, the reports, the research, the technical documents, and we pull out the critical knowledge you need.
And today, we're on a very specific mission.
We are. We're doing a forensic deep dive into the world of software localization, specifically for complex accounting systems in the Estonian financial market, EEE.
Yeah, and this is such a perfect illustration of why simple translation is, often the easiest part of localization.
Right.
We're not talking about just looking up words in a dictionary. We're analyzing the collision point between EU financial directives, mandatory Estonian tax law, and the very strict, unforgiving constraints of database architecture.
Exactly. And the person listening to this is probably trying to get their head around those non-obvious hurdles. The Estonian market is so interesting because it's the primary country for the language, but it's also an official EU language.
Which means the standards for compliance and, professional accuracy are just exceptionally high.
So our goal here is to really extract the biggest lessons from this whole process and highlight where a simple linguistic error can become a legal liability or even a technical failure.
And that liability, it starts at the very foundation with a legal structure. When you're localizing a major piece of financial software, the team has to first decide which regulatory framework the application is even going to support, because they're structurally distinct.
Okay.
We're talking about the duality of Estonian GAAP versus IFRS.
Okay, let's unpack that. For anyone listening who isn't an accountant, what's the major differentiator here? And why does this choice matter so much for the actual software design?
Well, what's fascinating is the sheer difference in the reporting burden. Estonian GAAP, that's the generally accepted accounting principles, it's designed to be streamlined.
Simpler.
Much simpler. It has significantly fewer rules, fewer disclosure requirements.
Yeah.
And this framework is recommended mainly for, the private sector, small and medium-sized entities, SMEs, and very importantly for all those e-residency companies, the OEs.
So if you're a small digital company operating in Estonia, you're essentially exempt from that global reporting heavyweight standard, which must save a huge amount of time and money.
Precisely. The state has tiered the burden. The sources actually show that Estonian GAAP has a specific category for microenterprises.
Okay.
And these tiny companies, if they meet some very stringent criteria, are allowed to prepare a drastically bridged annual report.
How abridged are we talking?
We're talking just a simplified balance sheet and an income statement. That's it. And that's a huge feature the software has to be able to support.
Right. So contrast that very low burden approach with IFRS, the International Financial Reporting Standards.
IFRS is the heavyweight. It is incredibly complex, very detailed, and it's globally standardized. In Estonia, it's only mandatory for entities that are publicly accountable.
So banks, insurance companies.
Exactly. Credit institutions, things like that. If your software is being localized for a major bank, it has to be architected to handle the entire massive IFRS disclosure requirement.
But for most local businesses, it's the simplified Estonian GAAP.
That's the operational standard. And that choice dictates the entire menu structure, the reporting capabilities, everything in the localized system.
That distinction really clarifies the foundation.
Yeah.
Okay, so moving from those high-level standards to the daily transactional reality, VAT, or KYVIMAX. I see our sources noted a very recent and critical compliance change here.
Yes, and this is where localization teams really earn their keep. For years, the standard VAT rate in Estonia was 20%.
Right.
But effective January 1st, 2024, the standard rate went up to 22%.
Just this year.
Just this year. Any accounting software that failed to implement that 22% change accurately and on time risks creating severe noncompliance for every single business user.
That 2% jump, that must have caused some chaos on January 1st. I mean, did the software updates catch all the transitional transactions correctly?
It had to. The compliance required all sales processes to be updated. And it's not just the standard 22%. The software also had to accurately handle the reduced rate.
There are others?
Oh, yeah. There's reduced rate 1, which is 9% for things like medicines, books, accommodation. And then there's the 0% rate for exports and certain international services.
Okay, so let's dig into the software structure itself. How does the system actually track all this VAT? It can't be enough to just, apply a 22% rate to a line item, is it?
Absolutely not. And this brings up a crucial point about data integrity. Compliance requires that the chart of accounts, the COA, which is really the backbone of all financial reporting, it has to structurally separate the money you owe the government from the money you're owed back.
So we're talking about liabilities versus receivables.
Exactly. You have to track output VAT, or Veljun KYVIMAX, that's your liability, the tax you collected on sales, often in account 2201. And you have to track it separately from input VAT, Box,
Which is your receivable.
your receivable. The tax you paid on purchases, often account 1301. This structural separation is completely non-negotiable for calculating the final settlement figure that gets filed with the Maksuja Tolimet, the MPA, the Estonian Tax and Customs Board.
So localization is basically compliance engineering.
That's the perfect way to put it.
Wow, that makes the stakes crystal clear. A failure there means you can't even file your taxes properly. Quick final confirmation on the legal side. Currency.
It's the euro, of course, adopted back in 2011,
Mhm.
but the localization subtlety is in the display text. The singular forms, euro and cent, they have to be preserved in the labels that print on receipts and reports.
You're talking about specific label IDs, 157 and 158.
Exactly. If the system accidentally pluralized those terms, it introduces ambiguity on official documentation, which you just can't have.
Okay, so that's the legal and financial backbone. Now let's get into the conceptual minefield, the part where the words themselves cause the headaches. The sources highlight that the core entity of the software, the set of books, was initially translated in 4 contradictory ways.
That's right. And this failure created a kind of internal identity crisis for the software.
4 ways.
Yeah. The system was just bouncing between edavoint, which means company or business, and mystic, meaning a data set, ramatupak, like a book package, and ramatud, which is just books.
I mean, imagine trying to explain to a user which one of those they needed to back up.
It was a mess. They solved this identity crisis by making a hard rule based on context. They standardized on edavoint for all the high-level, user-facing commands. If you want to open your business's financial records, you open the edavoint.
Okay, but then why not just use that one term for everything? Why keep another one?
Because they needed absolute clarity when the system was talking about the actual file, the data itself. So Enistic, the dataset, was reserved exclusively for low-level technical file handling functions, especially for warnings.
Ah, so if the database gets corrupted, the user sees a message like, "En mistake on Viga Sanud."
Exactly. And that way, the user knows immediately. My company, my edavoint, is conceptually fine, but the underlying data file, the edavointic, is what has failed. That distinction is paramount for data integrity warnings.
I appreciate that distinction. Okay, shifting to some fundamental accounting jargon. The term for a journal, a batch of transactions. The review found this term was widely confused.
Yes. The initial translations were using words like partii, which, it literally translates closer to batch or lot.
Which a journal is, technically. It's a batch of transactions.
It is, but partii lacks the specific professional cadence you need for financial reporting. The standardized, non-negotiable term for a journal in professional Estonian accounting must be loosened.
So what was the real cost of using the wrong term like partii? Did it just sound unprofessional, or did it actually confuse the accounting process?
It completely hurt professional credibility. Accountants rely on precise language. If your software is using unprofessional or just plain incorrect jargon, it immediately raises doubts about the system's compliance, its accuracy.
It undermines trust.
Completely. It undermines trust in the whole application. Lawson conveys the precise meaning of a transaction entry in a double-entry ledger.
That leads directly into document standardization. The database stores core document types invoice, order, quote. And our sources highlight a classic technical constraint here. The term in the database has to be singular, even if the user sees the plural.
This is a perfect example of where linguistic rules have to bow to database architecture. In the database's types table, the field name must be singular. ARV for invoice, telos for order.
Why?
Because the system pulls that singular term and automatically uses it as the header on the document itself when it prints.
I see. So if the database stored the plural invoices, then when I print a single document, the header would incorrectly read invoices, which is grammatically wrong and, frankly, legally messy for a financial document.
Precisely. The user interface can show a list of all your invoices. Using the plural, that's fine. But the data structure that feeds the print function requires that singular root name. It's a tiny structural rule that ensures clarity on every single piece of paper.
So what were the other core document standardization fixes that had to happen?
The whole vocabulary set had to be standardized to remove any ambiguity. A quote must consistently be hinapakubani, a price offer, so users know it's not a binding proposal.
Okay.
A credit note was standardized to the very descriptive kreditarv, a credit invoice. For contacts, the pairs were locked down. Debtor or customer is client or voljnik. Creditor or supplier is hankija or tarnija.
And what about manufacturing terms?
Right. The bill of materials, which is crucial for manufacturing modules, was standardized to Material di Loetelu. It's often abbreviated to just ML in UIs where space is tight. This kind of consistency saves hundreds of support calls.
It sounds like mastering Estonian localization means you have to be fluent in three distinct systems all at once: the language, the local accounting law, and the rigid constraints of the software's own data structure.
That realization is what brings us right into our third section, the technical tightrope, all the things that simply cannot be translated.
Okay, let's unpack the untranslatable. What were the absolutely forbidden elements that, if someone changed them, would just crash the application?
The primary failure points are what we call dynamic placeholders. If you see tags like at APPNAME or a variable indicator like percents, you cannot translate them or move them, for that matter, without extreme caution.
So at APPNAME, at 8, that just pulls in the name of the software.
Exactly. It dynamically inserts osFinancials or TurboCASH, and the percent holds variables like dates or amounts or transaction numbers.
And what happens if the localization team moves that percent placeholder to a location that makes more grammatical sense in Estonian?
That's the tightrope. Estonian sentence structure is often very different from English. If a translator moves that percent to fit a more natural grammatical flow, the application might try to feed a number into a position that's expecting static text, and that can cause the code to fail.
So you have to sacrifice linguistic purity for technical functionality.
You do. The
Yeah.
software has to inject the variable at a specific programmatic point, even if the resulting sentence in Estonian is a little less natural.
That is fascinating. What about proper names or internal file references?
Well, proper names like SWIFT, the financial messaging network, that's a global standard. It's untranslatable. What's more complex are internal references. The sources showed situations where internal table names, like sysvars for system variables, had to be preserved in the user interface.
Even though sysvars isn't an Estonian word at all?
Right.
So how did they manage that without just confusing the user?
They kept the English term, but integrated it grammatically. They used the genitive case, which turns it into a possessive form. So instead of a direct translation, you get a phrase like, "Tugenda sysvarsi parametrid."
Which means clear sysvars parameters.
Exactly. The user sees the untranslated code name, but it's embedded naturally enough that they can follow the instruction. It's a necessary compromise.
It sounds like it. Okay, let's talk about user experience and accessibility. Our sources noted that one tiny character was responsible for crippling accessibility in the initial translation: the ampersand.
And this is where you see the huge ripple effect of a minor omission. The ampersand, the and the symbol, it denotes an a keyboard shortcut.
Right, so in fail means you press Alt plus F to open the file menu.
Exactly. And if you're an accountant trying to close your year-end books quickly, or if you're visually impaired, you rely entirely on those keyboard shortcuts to navigate.
So imagine trying to navigate hundreds of menu items, open crucial windows, print mandatory reports, and finding that none of your keyboard shortcuts work because the localization team just omitted every single ampersand.
It's crippling. The initial translations were missing this character entirely, which effectively disabled the application's accessibility features. The team had to go back meticulously and ensure every single actionable menu item and button had an ampersand placed on a unique letter.
Turning a translation job into a systematic technical audit.
That's what it was. The entire functional usability of the software hinged on one tiny character.
Unbelievable. Beyond shortcuts, how did the team make sure instructions were clear?
They mandated extremely strict formatting rules. First, all actionable text on buttons had to be enclosed in square brackets.
To make it stand out.
Yes, so click on the next button is completely unambiguous. Second, menu paths required the right-facing arrow consistently for navigation. So you'd see something like sedistamine, documendi seated.
Set up document settings.
Right. Standardization is the antidote to user confusion.
And finally, let's talk about the tone of the system. I imagine punctuation plays a pretty crucial role in conveying the gravity of a system message.
It absolutely does. The final review found widespread punctuation inconsistency. Error messages, warnings, completion messages. They often lacked the required exclamation mark.
So if the source language says journal is not in balance, the localized version has to reflect that same urgency.
It has to, because if the message just reads, Lawson Iolda Tassakalis, journal is not in balance, the user might interpret it as a casual notification, not a critical system error that's preventing them from proceeding.
It's a soft warning versus a hard stop.
Precisely. A missing exclamation mark in a financial application softens the tone of a critical error, and it could lead a user to ignore a fundamental accounting failure. It was mandatory to ensure consistency and translate that urgency. Lawsund, aiule tasakalis, with the exclamation mark.
This whole journey just shows that successful localization, especially in a heavily regulated domain like finance, is really a form of technical compliance engineering.
It is. You need fluency in three distinct systems. Yeah. The target language, the local legal environment gap, BAT, the MTA, and the rigid technical constraints of the underlying code and UI.
And if we connect this to the bigger picture, the immense effort we've just described, correcting ampersands, standardizing laws, and ensuring singular database names, all of this is happening within the relatively straightforward context of a left-to-right language, an LTR language like Estonian.
That's a great point. LTR is the default direction for most software.
So why does that matter here?
Our sources highlight that the LTR setting itself is a critical, untouchable technical requirement. It's the master switch. It's used exclusively to flip the entire user interface, all the button placements, the text justification, the layout mirroring to right to left, or RTL for languages like Arabic or Hebrew.
Wow.
The complexity required to get it right in a language like Estonian, where the text flow is simple, is really only the preamble to the complete technical mirroring required for an RTL environment.
A compelling thought to leave you with. The complexity we just solved, making sure every single transaction is compliant for the MTA, is achieved through absolute attention to the smallest details. This huge scale of compliance starts with a single ampersand, a correctly separated VAT account, or an exclamation mark. The invisible technical constraint is so often the most critical thing keeping the whole system running. Thank you for diving deep with us.